Okay, hi everyone. Today I want to talk about a topic on SATS. Okay, SATS is a stock that I mentioned last year that I was accumulating. I mentioned it many times during our weekly Monday meetings. I mentioned it to our community, the SMT community, to a dollar cost average on SATS. That means to buy it on a monthly basis. I told them that I am selling my OCBC, which I've been doing for many years, accumulating the stocks, and selling it, and then I'm going into SATS. Okay, the idea is to buy low, sell high. Is to look for stocks that are, in my view, undervalued and accumulate the stocks. Okay, so that there will be upside after that. Okay, so today I want to share with you all some of the principles that how I find this kind of stocks and what are the principles that I use to find stocks like OCBC. Before that, I think was Sembawang Corp, and then recently last year was SATS. How I use some of the principles to find some of these stocks. Okay, so first principle, very simple principle. The first principle is whatever you're going to dollar cost average on should not go to zero. Okay, should not go to zero. This is quite obvious, of course, because if you go to zero, then no matter how much you dollar cost averaging is of no use. Okay, so if I were to put it in a word, is the longevity of the business. Okay, so you must ask yourself this question when you are accumulating this share for long term. Long term here, I'm talking about more than 2 years. You must ask yourself, the first question is, will they have a chance that this stock will go to zero? Okay, so or is it very low probability they go to zero? So whatever stocks that I look at is Sembcorp or OCBC or recently SATS for last year is will go to zero. So in my mind, I think that it will not go to zero lah. Okay, so that's the first question you want to do. Why is it important? It's because, let's say example right now, you accumulating stock. Okay, accumulating a stock, and ideally you want the stock to go down as it accumulate. Why is it so? It's because either it go down or go sideways is good. Why? Because if the stock is going sideways or it is going downwards, you will accumulate more shares. You buy more shares every month as it go down or at the same price. If a share were to go down, you actually accumulate or you buy more because you're buying every month. Okay, but if a share price was to go up, as the price goes up, you actually buy less share as the price goes up. So in generally, what I like, right, is something that does not go up immediately, okay, but rather it at least sideways for a while or at least go down for a while. That would be good. Ideally, you want it to be at least 6 months to a year of accumulation for that. Okay, but let's say example, it keep going down and it becomes zero and bankrupt, then you're out of the game. So that is the first thing why you cannot have it goes to zero. Okay, you want it to go down, but it must eventually climb back up. Okay, so that's the first thing. Don't go to zero. The second thing, which I mentioned just now already, is generally you want a stock that doesn't immediately shoot up. Okay, for stocks that are doing for shorter term, whether it's 3 months straight, position daily, or swing daily or swing weekly, you want to select stocks that are stronger than the rest. That means you buy strong and sell weak. You look for stocks that are currently in trend. Okay, those are the stocks that you want to buy and trade. Okay, and trade. But for stocks that you want to accumulate long term, you do not want to have stocks that are right now everyone is looking at it. Then it will not be a stocks that you can drop down or even go sideways. Okay, so there's a distinction between buying stocks for long term, you want it to go down, but buying stocks for short term for trading, you want it to be strong. Okay, you want it to be using scan to find the strong stocks. Okay, so that is one of the principles also. Another thing we want to look at besides not being go down is the system that you accumulate must be systematic. Okay, that means when you do dollar cost average, right, it must be on a regular basis regular amount so that you can have a system to accumulate, and you don't need to keep looking at the investment, because if it's going down, it goes sideways, then don't need to do anything. Okay, maybe once in a while it goes up, then you can take a look, but if not, then just accumulate. Okay, so it must be systematic. Okay, let's write this down. Okay, the one, longevity, it must be longevity for the stocks. Okay, second one, it must be able to be systematic. Okay, it must be systematic in terms of accumulated stocks, fixed month or fixed day, fixed amount. Okay, and maybe go through by gyro. Okay, go through by gyro. Okay, another thing that I want to talk about is, Collin, your stocks that you mentioned, Sembawang Corp or OCBC or SATS, right, are all Singapore stocks. I thought you trade mainly US stocks. Yes, for stock trading, I mainly trade US. But for long-term accumulation, I like to buy Singapore stocks. Okay, why is it so? Number one, because you are going to accumulate this for long term. Yes or no? Okay, even though they may not be in trend or maybe not so sexy, like Nvidia, okay, but those more for trading, position trading or swing trading. But this kind of stock, number one, is priced in Sing dollars. Okay, priced in Sing dollars. So if I accumulate long term, I want to keep in Sing dollars. Okay, number two, I already have exposure to trading to US dollar, trading US stocks. So I want to have diversification. That's why for all those dollar cost averaging plan, usually I do it in Sing dollars. Okay, I don't have the currency risk. And I also know that chances are it will not go to zero, okay, because we never know, right? Okay, so that is the thing. Okay, lastly is, how do I find stocks like that? How do I find stocks like that? So if I find a stock that have longevity and then I have a systematic way of accumulating stocks, then how do I find stocks like that? So generally how I do it is I will zoom out, okay, either to a monthly trend or a longer term trend, and then I will just draw a trend line channels. So like example, here, if I draw the trend line channel, somewhere last year, right, in August, actually, this is October, somewhere in August, I started to accumulate it already. Okay, last year. Okay, accumulate, and then, sorry, not last year, the year before, I already start to do accumulate already, and then I accumulated enough, and then it rise. Okay, so that was the strategy. Okay, so look at the long-term trend, look at it when it's undervalued at the bottom part of the channel. Okay, at the bottom part of the channel. Okay, I use this strategy also for things like STI. Okay, if you look at STI, you also can do the same thing. Okay, you look at STI, you can also do the same thing, which I did it with the community. Somewhere in 2020, somewhere in March. I think I did the webinar in July 2020. In July, I mentioned to the group in July that, hey, this is undervalued already. Can look at it to buy. Okay, and true enough, some of the community bought also. Same thing for SATS. Those people in the SMT community last year, they have been accumulating for the shares already. So that is a good time to accumulate. Okay, so yeah, so that is how you find the stocks. Another stocks that we mentioned just now, Sembawang Corp. Okay, Sembawang Corp also the same thing. The strategy is quite the same. Okay, basically you want to buy when it's cheaper. Okay, so you use this to find the cheap point, the price where you can buy. Okay, so somewhere around here, this is like 2021, or I think maybe mine is I forgot when it was even before that. I think it was even before that I bought Sembawang Corp. Okay, another one was OCBC. Okay, also buy it when it's cheap. I think somewhere. Okay, the years I really forgot. Okay, but buy it when it's this kind of period. Okay, that will be stocks that will be good. Okay, so all the trades that we mentioned, whether it's OCBC, whether it's Sembcorp, or whether it's SATS, we mentioned in the community. Okay, you can go back and check the previous recording. Okay, the exact date I'm not very sure, but we can check the video recording when I did the weekly webinar and telling them that, hey, I'm buying this stock for long term. Okay, I'm buying this stock for dollar cost averaging. Okay, one more stock that we recently talked about is, interestingly, Tesla. Okay, Tesla also went into that zone of cheap. Okay, I think S&T community, some of them also bought around here or here. Okay, this year. Okay, so use a chart, zoom out, look at the long-term trend. Okay, look at the long-term trend right now. Okay, So if you ask me, are they still in the value zone like Tesla? Is it a value zone? I think it's yes. Okay, it's yes. Okay, still in that value zone. Let's say example SATS, is it still in that value zone? Not so much. Okay, it went up since we accumulated. It went up almost 30% already. Okay, so for SATS not yet. OCBC already sold. Okay, I already sold. And I told the community I sold, and right now I think it's very high lah. Okay, very high in terms of the traditional projection is high. Okay, so I will not go in dollar cost averaging on something like this. I want to dollar cost averaging when it's cheap. Okay, the context is for long-term investing. Okay, so last one was looking at channel. Okay, looking at channel to look at things to buy. Okay, so today, just to summarize, number one, look for stocks that are long term. Okay, think of this. Think of it whether the business can last or not. In the next 10 years, will they be around? Number two, must be systematic, regular, same amount, same time, accumulate long term. Third is zoom out, use weekly chart, zoom out, draw the channel. Oh, by the way, if you draw the channel and the channel must be up. Okay, if the channel is down, it's no good. Okay, so the channel must be up. So long term weekly chart to the channel, then buy when it's at the lower end of the channel. Say the bottom 25% of that channel, that will be good. Okay, but there are stocks that are not like that. That means that long term are down, then please don't do that. Okay, so I hope this training has been useful for you all to know how to buy shares. Okay, how to buy shares and buy shares for dollar cost averaging. Okay, today SATS is up almost 9%, which is fantastic. Okay, so I hope this video has been useful for you all in terms of selecting stocks for dollar cost averaging. Okay, see you in the future. Bye.